Okay. Over here. So anyway, good afternoon. We'll get going in just a minute or so. And as always, what's the word I'm looking for? Yeah, so as always, these will be recorded. And actually, I have put up the recordings from the prior videos. And so after this video today, I will send the link out to all of you. I was going to put it up on the PowerPoint, but then I realized it's got one of those really long YouTube, what do you call it, like links. So it would be just easier to send it to you all by an email. So I'm going to send that out to the group today. And with that, I think we will get going as it's 12:30. So today's presentation is going to be a little bit different than some of the other ones in that we're going to move off budgeting and we're really going to start talking about sort of strategies and processes for choosing among capital projects and long-term investments. So this will be a little bit of a change of pace given what we've been doing for the last couple of days, but it's sort of nice to switch things up a little bit, I guess. And as always, if you have any questions, feel free to put them in the chat or in the Q&A area. And as I get a chance, I'll look at them and try to respond. So let's get going. Once again, our funder. So yeah, so today the big thing I want to do is really introduce a structured process for a manager or a farm owner to go through to decide among options for long-term investments for the farm business. And why use a structured process? Because I think as we go through this, it's going to seem, when you look at it, it'll seem fairly intuitive. But, I think it's really important, especially when you're, a really busy person, to have a process to make decisions, because having a process and a checklist and a sort of a consistent methodology to go through helps you make sure that you are being intentional, that you're considering your options, that you are really sort of anticipating what you might need. And I think, especially as you get overwhelmed with other tasks and other things going on in your business, a lot of times, it's hard, it's really hard to make good informed decisions when you don't have a lot of bandwidth. And so what feels right, like when you're reacting, it might not actually be the best decision. So having a structured process helps, make the thought process a little bit more intentional, that you've clearly defined the problem and you've considered, you've really gone through a process to consider what's important in making your decision. So the process we're going to talk about today is a fairly standard process. It's, if you were to take a business management class, it's often one of the ones that is put out there. And it's, it's actually named the 5-step process. And the process is basically, oops, oh, it says I'm muted. Sorry about that. So the 5-step process is ultimately, it's 5 steps. The first thing, is to clearly identify the problem that you are trying to address, the possible solutions for that problem. And that's where you really want to go, really think a little bit broadly. And then the uncertainties, the things that you don't know that you need to find out. And one thing that I really want you to note with this is that there is an iterative aspect to, to this type of decision making. Once you make a change in your business, you should have some metrics in mind that you're going to use to judge if your decision is a good one. Because if you don't have that evaluation and you ended up making a decision that isn't quite the right one, you won't you won't have the sort of metrics in place to be able to pivot if you made the wrong choice and to adapt. So what you want to do is to avoid sort of doubling down on a bad decision. So where I have the red arrow there between 5, which is the last step, and 1 is that, you always should be going back and evaluating if, this change is going in the right direction. And then what do I need to do given, the problems I was trying to address? So the first step, identify the problem to be addressed, possible options and uncertainties. The first step is clearly, and this is really important, is to clearly identify the problem, like the situation that you're trying to address. Because if you don't have a clear problem, it's hard to come up with a clear solution. Then you want to identify potential investment strategies that, both agree with your farm's business strategy that might make sense. And this is where you want to think broadly about potential ideas. And then you'll go through a process of narrowing them down. So a lot of times, when you're doing these, when you're thinking about making an investment, often, it isn't just like, do I do this or do I not do this? But but what are, like really thinking through different, your scenarios. So I think that is important because it's often there may be other, especially if this is like a fundamental or major change in your business, you don't want to get too locked in, with making an investment, because there could be some other investments that would make more sense, that you are not considering. And then when you have some potential options, you want to identify the information that you need that you don't know yet in order to make a decision. And so I think that's important because, you want to go through and make sure that you've considered, all of the factors that could be important. So let's just go through a fairly simple example. You have the Jones farm, and they're an apple farm, and they have several longtime harvest workers who are getting older but who are still reliable. So they see that their workforce, of their harvest crew is starting to age. And the owner and manager are both concerned about both the safety of these older workers and their productivity, going forward. And this is something that they're anticipating is likely to happen soon. Labor costs are also getting higher, and workers' compensation is also high. So injured workers and unproductive workers are a liability to the farm. But they've heard that harvest platforms might make the job more viable for older and less physically strong workers. And they also think, well, especially if they, less physically strong workers could harvest, this could broaden their workforce. So they are thinking that maybe instead of picking apples with ladders, that harvest platforms might be something that could solve a problem that they're identifying that they have. So their first choice is replace older workers. That's what they would do if they didn't change their system. So the questions that they have about replacing older workers and replacing them with new workers is, will this violate any EEO laws like age discrimination if they get rid of workers, based on a certain age or something like that? So they need to know, if you want to retire, how do you retire older workers legally? They're not sure what the law is around that. They've heard that there might be EEO stuff. They want to know what workforce is available to replace these workers. And will that workforce cost more? This is a farm that's had the same crew for a long time. They've been very reliable. They haven't really had to get new workers in a long time, and that's part of the reason they have such an old workforce. So they don't want to get rid of folks if it turns out there is nobody available. How long, if they get new workers, since it's been such a long time since they've had new harvest workers, how long will it take to get new workers trained, and have their skill good? And who's ready to do that training? They haven't really thought about that also as much because their crew really knows what to do, and what will training cost? And so that they need to know, so there's somebody on the farm who can do training, or can they hire somebody for that? They need to know how long should it take to get a new worker up to speed? What would they expect if they replace their older workers? How long, how long will that take? And then finally, and this isn't really necessarily something easy to quantify, but what will the effect on morale be on the crew, and how will that affect the farm? How will the crew respond if they don't bring these older workers back? Are they concerned about this? And maybe possibly are there other jobs these older workers could do that are cost effective? So that would be the replacing older workers. The other option is maybe, look into harvest platforms. What will the platforms cost? So they need to get the price of platforms and the associated costs. How will these platforms change the work of the entire crew, and how will they feel about that? So the impact of what impact on productivity will the harvest platforms have compared to their current system of picking by ladders? What so they want to have a sense of that also with, how productive, what change in productivity will the harvest platforms have? Will it change your liability and insurance costs for better or worse? So they need to get insurance information in order to evaluate this. What training will the crew need to use the platforms? Who can do that training, and what will it cost in time and lost productivity? Because this is a pretty small farm, and they are concerned that changing to a whole new system could mean that you've got a year where things are not going well. They don't know whether this is going to be a big change or not as big a change or not. So getting some sense of that, really dialing that down is important. Well, the platforms really, they've heard they could make it easier, and that's why they're looking into it. But will it make the job easier for older and less physically strong workers? Does this really broaden the pool? So they really need to know, and they really want to feel strongly about the question of how much difference will the platforms make to make the job more sustainable for their older or less physically strong workers. Because if it doesn't solve that problem, the platforms might still be a good investment, but their current problem is about this older workforce. That they're trying to think about whether or not this would help. So the next step is to get information, to gather information from all parts of the farm's business, evaluate a current alternate projects, get a better understanding. And, and the goal of this is to actually have open and honest communication to get more accurate results, so you want to, in this case, you want to, go through a data gathering. You want to talk to advisors about strategies for letting older workers who can't do the job anymore go. Like, eventually, even with harvest platforms, eventually you're going to get to a point where there are people who, they're 100 years old, right? They're not going to be even, they're not going to be picking apples. Like, how do you implement that on a farm and do it legally and do it right and do it in a way that, that people feel like okay about, like the other workers. You might want to talk to other farms who've hired harvest crew recently about their experience in hiring and training new crew members to get a sense of, like, since you haven't done this in a while, how has that gone? Talk to the crew about the job and what they think reasonable performance standards are and how those should be set, just so that you have a sense of what these are people who've worked for you for a long time, and just making sure that everybody's sort of on the same page about how the job goes and what's reasonable to expect. Call dealers to get prices. I mean, that's fairly straightforward. You could call farms that have adopted platforms and get feedback from the owners. Read trade publications on platforms to see what results there have been in other areas, or extension publications. Have meetings with your current crew about platforms if you're really thinking about it. Take some of them, who are sort of the leaders of the harvest crew, to go see a farm that uses platforms in action and see what they get some of their thoughts about how this could be implemented on the farm, what might work or what might not work. Not that you'll necessarily do everything that people say, but it's always good to be able to anticipate where people's concerns or problems are likely to be, so that you know what could come. Call your insurance carrier, look at your financials to see what you have available as far as funding. Call your lender to see whether or not you'd be able to finance a platform and what the interest rate would be, so that you can have you can put together a better budget. So that would be your next step, is to actually try to get the data you need to answer some of your questions. So the next step is to make predictions about the future. So you've gathered data, you have information, you've learned more about the possible scenarios. And so you want to pull all this information together to make predictions about what will happen if you make changes. So for both the platforms and for not doing the platforms, with the ladders, you want to forecast all of the potential, the cash flows, changes in expenses. So if you replace the workers, if you go through a process of replacing the workers, what will that cost? If you keep your existing workforce and use harvest platforms, what will that cost? You can use your operating budget, your enterprise budgets. You could do partial budget analysis. And this part requires a lot of judgment on your part as the owner. I mean, you don't know necessarily what will happen. You're just making your best guess, forecasting what you think will happen under both scenarios, given this data that you've gathered. Um, and then and then start to evaluate it. So you've put these scenarios together, you've made your predictions, you evaluate the scenarios, and so you really think that if you do harvest platforms, that the crew will be open to it, and especially after your meetings, especially if it means they can keep their jobs longer, because some of them did express that they're worried that that it's getting harder to go up and down the ladders, and and they're worried about injuries. So if they can keep their jobs longer and do it better, they're definitely willing to work with you to do that. In your meetings. You predict that the harvest platforms will be cost effective. You talked to somebody at Extension, and they had a platform savings calculator, and you guys ran through that together, and it seems like they will work. And in talking to other growers and talking to other people who do labor, it seems like, at least in your situation, it could increase the pool of workers who might be able to do the job. The demand seems to be good, so they'll hold their value. So even if you decide they don't work, there is a good resale value for them. So that's good, because some technologies that might not be the case. So the pool of workers, everybody's concerned in your area about getting workers and having good workers. So, eventually as people age out, you're going to need to bring people in. And so this does seem like, from what you've seen, that the pool of workers who could do the job on ladders is going to decline in the future. It's going to get harder and harder and harder to find people to do that. So having the platforms could make it so that you have, a larger potential pool. You might have more women who can do it, more older workers who can do it. But the other thing that you've identified looking at the scenarios is that you need to have staff who can effectively train new employees and new employees on new technology, regardless of what option is chosen. Like, that is something that you have seen both scenarios that came up, is something that is definitely needed on your farm, on the Jones farm. So then you make a decision by choosing among the alternatives. So you've looked at keeping the ladders and getting younger workers and the viability of that, and you've looked at getting harvest platforms and whether or not it will help to make the job more viable for your current workers. And you want to determine which investment strategies is the greatest benefit and least cost to the organization. And one thing is, especially in some cases, costs and benefits might not be directly quantifiable. It may not be, like good morale on a farm, or, is something that's hard to quantify, but it definitely has can have a financial impact. Having, the job be more pleasant can be, or feel, more pleasant to do. It's hard to quantify that. I mean, you can come up with methodologies to try to quantify it, but it definitely is more likely, if a job is more pleasant to do, it's easier to get people to do it. And so you're likely to be able to find people to do the job, as opposed to a really unpleasant, uncomfortable, difficult job. So, so you can't necessarily put a dollar value to everything, but as you're weighing things, these may be things that you lean more one way or the other. You have all that quantitative information you obtained in step 3. You've looked at your budget numbers, you've made your predictions. And then you can use one of the capital budgeting methodologies, something like net present value or internal rate of return, to determine which projects best meet your goals. And we're going to cover those in later classes, actually in a couple of days. The harvest platforms, you've decided, the financials make sense. But even more importantly than the financials making sense, they also look like, from what I've seen, that they do solve my problem of making my existing workforce able to work longer, and broadening my workforce in order to help make it easier for me to attract employees. I did calculate the net present value of investing in platforms, and that it came out to be greater than 0. So it seems like a good investment. I'm not going to lose money on the platforms overall in my budgets based on my assessment. So there didn't seem, at least for me, any obvious negatives to adopting the platforms, and there seemed to be more positive more positive attributes compared to the replacing workers and continuing to use the ladder system, except that some of the older blocks still will need to be harvested by ladders. And so I have to make decisions about how to allocate that type of work fairly. And so there's, implementing that could still be a challenge. And so the last step in this process is, you implement the decision, but you have to be able to evaluate the performance and learn from it. So given the complexities, and that there's sometimes there's long-term horizons, so the first step is obviously to get the funding and make the investment. And when the investment also affects workers, you have to plan for training and get that investment fully adopted, especially if you're changing technologies. But the most important part of this step is to actually have some metrics that you're going to use to go back and evaluate whether or not this investment actually is giving you the performance that you anticipated. Because whenever you're projecting what will happen in the future, you do the best you can to make assumptions and to anticipate what will happen. But sometimes sometimes you're wrong. It may turn out that you get the technology and it's doesn't work as smoothly as people said it would do. It doesn't quite fit in your system. All of your existing workers end up leaving anyway because they get better jobs somewhere else, or they decide not to come to the US anymore if they're H-2A workers. And so regardless of the fact that you've put this technology in to make your existing workforce work better, you're still having to hire a whole new workforce and train, which is what you were trying to avoid doing. So it may be that things don't work out exactly the way you thought they were going to work out. And so it's really important to be able to pivot if it turns out that the project really isn't working like you thought it would and you're losing money. Be prepared for that, because there is a bias. There's this sort of the sunk cost fallacy. I've already invested this, I'm going to keep investing in this. People tend to you make a decision and it's important to acknowledge when you've made a mistake and it's not sustainable. And so, for this one, you definitely need some metrics. It could be we're going to look to see if injury rates go down, or we're going to look to see if our labor hours for harvest are reduced, we're able to be more efficient, or maybe our yield is increased because we're harvesting the same amount of time, but now we're able to get more off the trees or go through blocks that previously we had to leave unharvested because we just couldn't get to them because it took too long. We want to look at our pack out quality. Is it better? Is it worse? Because if our pack out quality is worse, then even if it's faster, that might be something that we have to work on. See how workers feel about this. Has worker satisfaction with the job increased, which is what we're hoping, and worker sustainability. But maybe there's problems with the way these are managed that we hadn't anticipated. So we need to have a plan to, at some point, evaluate how this is going, and then, to adjust it based on the results. And adjusting doesn't mean that you totally abandon what you did, but it means that, okay, there's some things that we didn't anticipate happening that now we need to we need to go through this whole process again, right? Okay, now we have a new problem, and we need to identify what we need to know and go through this iterative process again to figure out how we can adjust this. So this is, this 5-step process, is actually a process that you can use. I have it in the context of making a capital budgeting decision, but it's a process you can use whenever you're making management decisions, right? So it's not just for making major investments. It's also for, do I, promote somebody, right? Do I, anytime you have to make decisions and you're operating under uncertainty, this 5-step process can be a methodology that you can use as a manager in order to make better decisions and more informed decisions. So with that, I can take any questions you might have. Good. So tomorrow we're going to be actually getting back into more of the financial metrics. We're going to be talking about cost, volume, profit analysis, and doing sensitivity analysis in order to figure out how, if we have our financial information, how we can make adjustments and, and maybe increase our profitability either through changing costs or changing volume. And then the next day after that, we're going to look at some of the capital budgeting techniques, how to calculate internal rate of return and also net present value. And then the last thing is, and this isn't going to be a video, but I will put together well, I guess it will be a video, but it won't be a webinar. I'll put together some information for you all on how to, with Excel, especially if you're using budgets and things in Excel, some of the common formulas and way of using formulas to make it so that you can be more efficient as you're sort of setting up scenarios. I realize that for some of you, Excel may be, like second nature, but there are other people who may not use it very often. And so some of the things that you can do, and be, to make your work easier, if you don't know how to use those tools within Excel, it can be more overwhelming than it necessarily needs to be. So I'll put together some of the common sort of ways of creating formulas and using formulas, and some of the built-in formulas that I find to be really helpful when I'm using Excel. So I'll put that together both in a sheet for you all, and then I'll try to do a video showing where some of these things are. So otherwise, I will see you all tomorrow, if there aren't any questions.